What's up, everybody? Jaspati Singh here. And with inflation continuing to run hot, the Federal Reserve Bank is now taking even more action, like we just saw, to fight this inflation problem. And this is where things get very tricky, because if the Fed cannot bring down inflation very soon, people are going to start losing trust in the Federal Reserve Bank. And by people, I don't just mean people that are watching this YouTube video. I mean people around the world. Because if people around the world start to lose trust in the Federal Reserve Bank, that means they also are then losing trust in the United States dollar. And that's not good news, because the United States dollar is the world's reserve currency. And so if people start to lose trust in the world's reserve currency, they're going to start looking for a different way to store their value, to store their money. And if people start to do that, that could start a dumping of the dollar, which could not only hurt our currency, but then significantly impact our economy, because we operate off of the dollar. So there's a lot of concerns there, which is why now the Fed has to really get serious about fighting inflation, and why this inflation problem is a real thing that they need to solve quickly. But what I want to do today is talk about some of the things that you can do, because until that happens, we're going to continue to face very high inflation. And there are things that you can do now to protect yourself from this high inflation. Some of the things can help you protect against high inflation. Some of them will allow you to find opportunities in the high inflation. So let me just jump into these 7 things, because number 1 has to do with understanding what happens when you see inflation. Because inflation is when you inflate the monetary supply. When you increase the amount of dollars that you have without increasing the actual wealth that you have, because our dollars are not backed by gold or silver or anything tangible. It's just a promise by the United States government that our dollars have value. So when you just print more money without producing more actual wealth, the value of each individual dollar that you have goes down, causing the price of things to go up. That's why gas prices are going up. Also, you also have Russia, but that's why grocery prices are rising. That's why vacation costs are rising. That's why housing costs are going up. That's why the price of everything across the board is going up, due to the money printing. Well, what does that mean? That means 1, your salary is not going to stretch as far, but also 2, your savings don't stretch as far. And so when you're in a high inflationary environment, your savings become less and less valuable, which is where you have to understand how to save your money strategically. You do not want to just save your money to save it, because if you're just saving your money, you're losing value to inflation. You have to be investing your money, but this is where you got to save strategically, meaning save for an emergency, because our economy is going to go through a rough time. So you want to make sure you save for an emergency, save for investments, save for a big purchase. If you're not saving money for one of these 3 reasons, you should not be saving money. You need to be putting that money to work. Then, once you understand this, how inflation affects your money, this brings me to number 2, which is the speculative side, which is going to be the most impacted due to inflation. So by speculative side, I mean things like the tech companies, things like crypto companies. These were a byproduct of the inflation boom that we saw happen in 2020 and 2021. During the last couple of years, we saw trillions of dollars get printed. They were injected into our economy, and money was much more accessible. There was just a lot more dollars out there. And many of these dollars went into speculative assets, some of them being tech companies, some of them being crypto brokerages, some of them being cryptocurrency. Now, as we're doing the opposite, we're doing quantitative tightening, as the Federal Reserve Bank is trying to pull money out of the economic system. Well, the companies that ballooned because of the inflation are now deflating. So you're going to see a lot of downward pressure on tech companies, crypto exchanges, and cryptocurrencies. So what does that mean? Well, it can also create opportunities, because, like I've been saying, when a bad asset fails, it causes the price of good assets to also fall. This is where, you will see some of the more non-valuable, just the get-rich-quick type of investments go down. Some will go bust. You might see some businesses shut their doors. You might see some more cryptocurrencies go away. But it will also create opportunities for other types of investments, other types of tech companies, the new tech companies that are sustainable, that can run a profit, that can grow themselves, other cryptocurrencies that have real technology, real growth potential, real blockchain use potential. And that's something that, if you're willing to invest for the long term, you can find great opportunities because of that. Like one of the things that I do is I invest in crypto, and I also invest in some tech companies. I invest in tech companies passively through some ETFs that I buy every week. I also have a number of other ETFs that I invest in. It's just a small piece of my portfolio because it's speculative. Same with crypto. I buy crypto every day. There's a couple coins like Bitcoin and Ethereum that I like, that I buy daily, whether the market's up or down. But I also understand that, hey, there's gonna be a lot of volatility. I expect a whole lot more volatility. And I'm not holding it for 6 months or a year. I'm holding it for a long time. Like we're talking about a decade. So that's where, it can create opportunity. But again, it's speculative, it's risky. So that's one place that you could potentially invest your money. Now, if you are investing your money in crypto, I want to give you a little bit of a warning here, because you want to make sure you're using a good exchange. But then you also want to make sure you're not keeping your crypto on an exchange. Make sure you take your crypto out of your exchange and put it into a wallet, whether it's a cold wallet, a USB drive, or a hot wallet. Just take it out of the exchange, because if it's on an exchange, you don't own or control your crypto. Now, if you're looking for a good cryptocurrency exchange, you can check out our sponsor, FTX US. They make buying and selling crypto super simple. You can enter in which crypto that you want to buy, and then you can pick the frequency. So it's very easy. I mean, if you want to buy a crypto once, you can do that. If you want to buy Bitcoin every month, you can do that. If you want to buy it every week or every day, you have that option. And the fees on FTX US are so much lower than pretty much every other major brokerage out there. So it makes it a lot, more accessible, and more of your money is being used to buy crypto instead of just making your brokerage richer. And right now you can trade cryptos and NFTs, but they'll also be letting you invest and trade in stocks very soon, plus some ETFs. So if you want to learn more and see how you can start trading with FTX US, I'll put the link to how you can do it down in the description below. And they also have a promotion going on that if you use my link down in the description and enter in the referral code minority, they'll also give you some cool stuff. Like if you trade $150 worth of crypto, they'll give you $20 worth of crypto for free. But you got to click the link down in the description and then enter in the referral code minority. The third thing that we got to talk about has to do now with how do you save real money, because we talked about how cash is losing value. The way Ray Dalio says it is cash is trash. But if you want to save real money, another thing that you could potentially look at investing in is hard metals like physical gold, maybe even physical silver. I own physical gold. One of the things that I do is every month I buy a little bit of physical gold. And so, gold is a store of value. Our paper dollars are a currency. And so this is where you have to define what money is, because back in the day, like we're talking about before the 1970s, our paper dollars were backed by physical gold. Then in 1971, President Richard Nixon took the dollar off of the gold standard. That way the government could print money essentially on command through the help of the Federal Reserve Bank, because the United States government was spending way more money than they were bringing in. And instead of defaulting on the debts, they decided to take the dollar off of the gold standard, because now you can print an unlimited amount of money, because when you're on the gold standard, you can only print dollars relative to how much gold there is. And so because the United States had so many obligations, so many liabilities that they needed to pay, they took the dollar off the gold standard and started printing money on command. And that created more inflation, but that gave the government the power to print as much money as they wanted to. This is where gold, although it's not a traditional currency, you can convert gold to any currency that you want and exchange with that, but it is a better store of value. Now, is it volatile? Sure. But when you see inflation and inflationary worries, people want to move to a safer asset, and the safer asset many times is gold. It's been money for centuries. And so it's another way for you to save hard money. That's the way that I look at it. When I invest in gold, I'm not looking for a return on my money. I'm just looking for a better place for me to save my money, because the way that I look at it is, if I have $50,000 of cash and I have $50,000 worth of physical gold, and I bury both of these in my backyard, in 10 years, which one's going to have more buying power? I think it's going to be the gold, not the cash. So it's another way for you to save money in a high inflationary time. The next thing that you can do when you have this type of high inflation is look for a different type of investment, like a value investment in the United States. So one of the things that I talked about earlier was how speculative investments have been getting hit hard. Like that's why you've been seeing layoffs across the tech sector. You've been seeing hiring freezes across the tech sector. All of these speculative companies are being hit so hard that they're being forced to downsize. And money from the investor side is moving now to the value investments. These are companies that don't need investment money. These are companies that don't need outside debt in order to survive. They have big profits and they can use their profits to support the company because they've been around a long time, they're more mature, and so they can sustain themselves. So one of the things that you can do now if you're looking for a safer investment is start investing money in some of these value companies inside of the US instead of looking for just the growth, momentum, the quick speculative type of investments. The value companies, while they might not give you the same upside potential as some of the growth and speculative companies, it gives you a little bit more of that lower risk that you might be looking for when you have high inflation. And the alternative to that, which is the next point, are value investments outside of the United States. Because if you're worried about high inflation, what that means is you're worried about your currency being devalued. Remember, inflation is when you increase the amount of currency out there. And when you increase the amount of currency, the value of each individual dollar goes down. And so if you're worried about the dollar, which is what that means, if you're worried about inflation, you're worried about the dollar. When you're worried about inflation, one of the things that you can do is invest your money in companies outside of the United States. And what that means is now you look for value companies that have profits, that are creating things that people need, but now they're not operating in dollars. They're operating in a different currency, in a different country, in a different economy outside of the United States. Now, this is much more difficult than investing in a value company in the United States, because in the United States, like, people know what McDonald's is. You know what Walmart is. You know what Amazon is. But you might not know what a company that is thriving in India is, or Brazil, or Korea, or China. You might not know that. So if you don't want to spend all that time to research all these companies, the next best thing would be to look for an emerging market ETF. So an ETF is an exchange traded fund. It gives you exposure to a number of different companies. And now you can look for an ETF that gives you exposure to emerging markets, which are countries outside of the United States that are investing in value companies. So now, what does that mean? You're investing in a group of companies outside of the United States that are not within this government, that operate on a different currency, that are producing products and profits. So it's a way now, when you are worried about inflation, for you to diversify, not just in the stock market, but in a different currency and a different economy as well. So, it's a different level of risk, because in the United States, we know how strong our economy is, we know how strong our government is, we know how strong our military is, versus some of these emerging markets don't have that. But it's a protectionary way for you to now invest your money and get that type of protection. The next point that I want to talk about has to do with physical real estate. I love real estate investing, and the reason why I like real estate investing is because you own something tangible. When you invest your money in the stock market, the crypto market, even emerging markets, these are paper assets. These are things that you own on paper, and at the end of the day, you don't own anything that you can see, feel, and touch. Sure, if you buy a share of Amazon, you own one share of Amazon, you are one of the owners of Amazon, but there's nothing that you can really show for it besides what's on your phone. And that makes it more able to be manipulated, because, the reality is, if you can't access your brokerage, if something happens to the stock, if something happens to the New York Stock Exchange, you can see just a lot of volatility and a lot of manipulation, especially in the short term. Versus with physical real estate, you own something that you can see, feel, and touch. You own land, you own the building, you own the windows, you own the door, and you own something that can produce cash flow. Because when you own real estate, the whole idea is now a family can live in the property that you own the asset. A family's gonna live there, and every month they're gonna pay for your rent. And if you do it correctly, this rent will pay for your taxes, your insurance, your maintenance, your mortgage, and your management fees, and put some money in your pocket. This is why real estate can be one of the most profitable, or one of the best investments out there, because you get the cash flow, you can get appreciation, but it takes a lot of work, because now you have to find the property, you need access to more capital, You need to talk to a lot more people, because now when you invest in real estate, you're not just going out and pushing a couple buttons on your phone. You're going to actually be going out, looking at properties, doing property inspections, working with inspectors, working with contractors, working with attorneys, working with accountants. So it's a lot more work, but you can see a lot of upside and a lot of tax benefits from investing in real estate. And the last point that I want to talk about, and I want to make sure I talk about this, is business. Because the American dream was originally come to America, earn an income, buy a home, build equity in your home, and now you own where you live. But now, as home prices are skyrocketing, as mortgage rates are skyrocketing, home ownership is becoming much more difficult, making that traditional American dream very hard for so many people. However, the newer American dream, in my opinion, is entrepreneurship. Because if you are an entrepreneur, you have the ability in America, and I'm telling you this from firsthand experience because I'm an entrepreneur, to build equity in your own business. And your business, it's a lot of work. Not everybody's meant to be an entrepreneur, but your business can then produce your own stream of cash flow. It can build you wealth. It can build you generational wealth. And you don't need a ton of money to start. You don't need a ton of expertise to start, but you need a lot of hustle, a lot of willingness to learn, and a lot of willingness to, take risks and apply yourself. And America, while there are issues in America, it is the best place on the earth to be an entrepreneur. And so that being said, now, when you're worried about inflation, and even if you just ignore inflation for a second, if you want to build real wealth, the number one best way to do that is by building your own business, hands down. If you can build a business, you can build the most amount of wealth. After that, instead of building a business, it's about buying a business or investing in businesses. You can do that on the stock market. And then after that, it would be just relying on your salary. So relying on your salary is the worst thing that you can do. The next best thing is investing your money to build this equity. And the even better thing than that is to build this equity yourself by building your own company. Now, when we add in the inflation issue, where now wages are not keeping up with inflation, where you have a higher cost of living, where the price of products are growing, you have to be on the producer side. Now, one way you can do that is by being an investor, but then if you build the business as well, you control the pricing power, and you are building that means of production. Now, again, being an entrepreneur is not easy. It is difficult, it takes a lot of work, it takes a lot of time. But if you have the entrepreneurial bug, this is a place now where you can invest more of your time and your money to build more of your wealth. Like right now, most of my investment money is going into Market Briefs, which is the newsletter company that I started. I'm the CEO of Market Briefs. I'm also the founder of Market Briefs. So I work there every day, but I'm also the owner. And I'm investing heavily into Market Briefs. That way we can turn it into a much bigger financial media company. And so inflation, of course, plays a part with us. We don't charge a subscription fee to our consumers. We are a free financial newsletter where we cover what's happening in the top finance and business news. But the way that we make money is we charge sponsors and advertisers a fee for placement within our newsletter. This allows us to keep our newsletter free for our readers, and we work with businesses. However, inflation does affect us because guess what? We have costs, like costs for employees. We have costs for our office that I'm in right now. We have costs for our softwares. All the prices of every single one of these has gone up significantly. But we have the ability, at least right now this can change, is we have the ability to change how we sell advertisements to sponsors. Now, of course, as the economy continues to get hit, we may have to pivot, we may have to change our strategy because sponsors are now less likely or less willing to spend money in advertisements, but that also means that we have to change potentially what kind of advertisements we're going after. However, the point that I'm trying to get at here is when you are worried about this type of inflation, obviously cash is not the best investment. You want to be saving your money strategically. Save for an emergency, save for an investment, or save for a big purchase. Then you could look at finding the speculative investments that are getting hit hard. You could look at owning some physical gold. You could look at investing in value companies in the United States. You could look at investing in value companies outside of the United States. You can look at investing in physical real estate, and then you can look at building your own equity, building your own product as a way not only for you to beat inflation, but for you to create opportunities. And some of you might be thinking, but Jaspati, they're about to enter a recession. Who wants to start a business when you're about to enter a recession? Well, some of the biggest companies out there today were started and built during a recession, like Uber, Airbnb, Microsoft, Apple. All of these companies were created during down economies, which is why it's not a matter of what's going on around you, it's what's going on in here and looking for the right opportunity that you can take advantage of. If you enjoyed this video and you want to see what 7 investments you should make next time we see a market crash, that way you never have to worry about money again, I made a video covering that, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. Uber, Instagram, WhatsApp, all of these companies were created during a recession.